Hello everyone! How are you? Good to see you again. Thank you very much for joining today's live stream. So today is the 7th of August. This is on Wednesday. And today I would like to share my trade performance in the month of July, since the markets are a bit quiet, retracing today. So I thought it's a perfect timing to share my trade performance today. So first I will be sharing overall performance of myself today, and also I selected one of the markets, one of the my trades, and exactly share how I entered and exited my trades with some profits. And the rest of the trades I took are explained in my communities, either GTS or KTS Academy. So if you want to learn more, then you're always welcome to join. The Global Training School is going to be happening in October, in 2 months, and there are 3 seats available still. So if you're interested, please let me know by email, then I can guide you how to join, what steps to join next. Okay, so thank you very much for joining. Good to see you again. All right, Ichimoku Trader, good to see you. Nadim, thanks for joining. Sim Fonja, good to see you. Philip, thanks for joining. Jean and Rajesh and everyone, good to see you here. Yes. So a couple of days ago, I took a poll, actually, which was posted in community tab in my YouTube channel. If you've seen it already, it's like this one. So I took a survey. My question was, how was your trade performance in the month of July? And I got 263 votes, and 39% was win. And losses were 29%, break even 11%, no trades 21%. So this is pretty impressive that lots of people, more winners than the losses in the month of July. So if you have studied Ichimoku and if you are in the mindset of trend follow strategy, then I think it was relatively easier market to make profits in the month of July. Of course, you need to be patient. Once the trend happens, you better keep holding the trades until the trend ends. So patience could be required, but we had lots of trends in the month of July, unlike the other years. I got big profits, almost close to 22% return in the month of July itself, which was quite impressive, not only per monthly basis, but also in the month of July, I have been only like 0% break even or minus 1%, plus 1%, because usually I don't aggressively take trades, because usually the markets range for the last couple of years. If you can look back my own trader performance, you will see that. But this year was different. I saw lots of trends on pound pairs, JPY pairs. So for those who won the markets over time in the month of July, I think you took the trades on pound or JPY pairs. If you remember, JPY pairs were trending up all the way. So I think you made some nice profits too. But also, the end of July, towards the end of July, JPY pairs went down so fast. So I'm sure you also took one of the JPY pairs sell towards the end of July, and maybe you were able to make some profits. But let me know, how was your trades in the month of July on this comment on the live session today. Okay, so and break-even 11% was also good, because break-even is also very important. Break-even is not the loss. So that means no matter how many entries you take, you won't lose over time, right? So let's say if you took 10 trades in the month of July and ending with a break even, that means you are becoming better in the risk management. So I think before you start to make profits, you will be into the phase of the break-even stage. So before you have break-even stage, I think your performance will be ups and downs. Some months, some weeks, some days will be profitable, and some months and weeks and days are losses. And overall, in yearly basis, is unstable. But after you master the strategy, especially the risk management part, then no matter how many trades you take, becomes break-even. Then you will start to make profits over time after that phase. And that's why in my YouTube I say, help you become a non-losing trader. If you become a non-losing trader, then that means you are secure in terms of the drawdowns and also the losses. You can control the losses, which is more important than actually making profits. We are here to make profits, of course, and we are here to take profits. If I can't take profits in trading, then of course I wouldn't do this. So lots of people, including myself, start trading to make profits. Then you look for some winning strategies, winning indicators, new strategies that seems to be winning. Then you try this and that. Then eventually, I think you will get to the truth of the importance of the risk management. So if you become better in risk management, then basically no matter which strategy you use, you should be winning trades. And personally, I prefer to use Ichimoku, and I prefer to use it in a trend follow mindset, and that's how I make profits every month. So yeah, so that's my introduction for today's live stream. Okay, Rajesh says 100% no loss. Okay, no lose stock market. Okay, that's great. Yeah, no matter how many entries you take, the most important is not to lose, or not to lose big is, I think, more precise phrase. Losses are okay, losses do happen, but if you can control the losses, then you will be able to make profits over time. This is the truth of the risk management. Okay, Ichimoku Trader says, I don't trade at all when I'm not feeling well, even if I see a good position in the market at that moment. That's really important. Yes, because our spirit, our mind, and our body are closely connected. So if you're not feeling well, or if your emotion is not really well, then you may not be able to perform well. So if you are feeling not good, or if you're unhealthy, then you better take a rest. You better leave chart and come back whenever you're ready again, because markets are open 24 hours every day. So there's always timings for you to come back and look for some opportunities. So yeah, let me share my spreadsheet first, as I always track my record on the spreadsheet. And that is this one here. The spreadsheet is available in the communities, GTS and KTS Academy, because this is for the training purpose, and also I use it on my own. But on this spreadsheet, basically I focus on these numbers. Don't focus on profit losses, because this is only for the spreadsheet purpose. But the numbers we have to focus here on the spreadsheet is the win rate and the profit factor and R multiple. So this part you have to refer to your own brokers. So don't look at this one, but you better focus on the ratio part. Ratio part is, ratio numbers are the most important when you look back the trade performance. So because no matter how much you have on your account, ratio part remains the same, right? It's universal. So we better focus on these universal numbers. Some people talk about how much I made today, this week, this month, how much I lose this month. But how much part actually is not really important because it's not universal. So win rate was 42.86% in my trades, which is average because usually I have the win rate between 30 to 40%. So 42.86% is actually okay. It's normal for me with my strategy. But what's the most important number is the profit factor. The profit factor is calculated by gross profit divided by the gross loss. So in other words, the profit factor is calculated by the risk and the reward ratio in terms of money, and that's 5.42. So 5.42 simply means that when you risk $10, then you expect $5. When you risk $10, then you expect $54 in return. That's 5.42 profit factor. So basically, this is a ratio between the win and how much you win, how much you lose, risk ratio. So PF5, the first goal you have to achieve is to achieve PF3. Because if you achieve PF3, that means you won't never lose. You will never lose, no matter how many times you lose. Basically, overall, the worst case scenario would be break even. So PF is really important. And in the month of July, I got PF of 5.42, which was pretty good. I actually had one of the biggest, very big profits on one of the JPI pairs towards the end of July, and that made such a nice performance. And yeah, and our multiple is basically the risk reward ratio in terms of pips. How many pips I lost in average, and how many pips I won in average. So pips ratio between win and lose is basically our multiple. So these are the three numbers I focus only. And also, I just put the return column here. So that's a 21.8%, which was quite good. So again, unlike the other years, the month of July has been great for me. So I think the month of August will be active markets. So I continue to monitor the chart and just do what I can do. I don't really expect to make profits every month, to be honest. I simply follow my strategy with my own rules, and if I just be disciplined, then I get the profits in the end, right, as a result. So it's not really me that's making the profits, but it's more like the the markets are making profits for me. So it's with that kind of idea, if you trade over time, then you will realize that the profits are the byproduct of your discipline by following the rules with your own strategy. So every time I enter trades, I don't really expect the winning trades, or I don't expect the losing trades. My mindset is always neutral, and whatever it comes, I just take it. So in the month of July, overall, I took 7 trades, and as you may know already, I take 2 trades, 2 positions in 1 trade, 2 positions. So that's why you see pound JPY times 2, or pound JPY here times 2 on the 10th of July, and pound Swiss franc times 2 on the 12th of July. So I take 2 positions per trade, and overall, I took 7 trades and 14 positions. So my graph is like this. So whenever you see graph, again, you better draw the bullish N wave. If your graph looks like this, then this is gambling. This is not good. It's gambling. Or if your graph looks like this, then the more you trace, the more you lose. So you better stop trading when you see reverse N wave pattern on the graph. So the ideal graph you want to draw is the N wave. You make profits, and along the way you have some break-even trades, small losses, but the future profits covers the previous losses. Then next you have some losses again, break-even trades, but the future profits cover the previous losses. As a result, the graph should be on N wave. And as long as you're able to draw N wave on the graph, on the performance, then the more you take trades, the more you win over time. And you can compound your profits without withdrawing the money. You compound the profits, so the more you win, the more you grow your asset over time. Like a snowball effect. So the snowball becomes bigger and bigger as you make profits exponentially over time. That's exactly how I grew my account. So so today I would like to explain one of my trades which I did on the 10th of July, which was pound JPY, because at this state this was a winning trade, but more importantly I had some slippage. So today when I review my performance, I would like to also talk about some slippages, because if you remember, in the month of July we had so many big news, including fundamental news and some surprise news. So you may also have experienced some slippages, and you may be experiencing the slippages in the future whenever there's big news. So today let me explain how it happened on my trade on pound JPY on the 10th of July. So so let me open Discord and explain that part. Okay. Okay, Ferdinand says, I am trying to discipline myself and not opening any positions if I'm not sure. That's really important. Yeah, that's true. If you're unsure, sometimes you see trending market, you see Ichimoku situation, you see the price actions, wave analysis, whatever you do, indicators, whatever you see, if it's unclear, then never enter trades. You always enter trades whenever the things are clear. Whenever you think things are not clear, then do not enter trades. That requires patience, but it's really important. Sometimes, we may feel FOMO whenever you check the charts, whenever you see the markets going up and down, you may want to jump in. But if it's unsure, then do not enter trades. You better study and master until things are becoming sure for you to enter trades. So that's really important. That's a discipline right there. Hello Wayne, good to see you. B-Bond says, love that your losses are so small compared to your winners. Have you read the book Best Loser Wins? Your performance is the subject of the book. Small losses, big winners, nice job. I don't think I have ever read that book, but my concept is like this. So in terms of the losses, I got these losses here. If you look at this losses column, since I take two positions, right? I always take 2% risk to stop loss in the month of July. So since I take two trades, for example, on the trade pound Swiss franc, for example, the market went backwards and I got the losses of 0.38% times 2, which is less than 0.8%, right? 0.76% was the drawdown per trade. So 0.76% is really tiny amount if you look at the whole, your account. So I risk 2% to stop loss, but as I monitor chart, if the market goes against my direction, then I exit my trade before the price hit the stop loss. And I have a strategy to do that. And that's why my drawdowns are really tiny like this. Next trade was also 0.38% drawdown times 2. And this one was a bit bigger, 0.74%. The last one was 0.80%. So it was a bit bigger. But overall, I never lose more than 2% per trade by 2 positions. So that's why I keep my drawdown small as possible. Because when you think about it, in terms of the winning trades and losing trades, which one do you think is more difficult? To make profits, let's say to make bigger profits, or to reduce the drawdowns? Which one do you think it's easier to manage? Let me just ask you this question. So you're here to trade and you enter trade and you think making profits is easier, or controlling the drawdowns, managing the drawdowns is easier? And which one is more manageable if you think about it? Okay. So yeah, okay. TradingView looks like I created the Ichimoku indicator that shows the time cycle. Oh, that's great. That's great. Yeah, you can use those indicators to support for your analysis. So yeah, which one do you think it's easier to make profits or to control the drawdowns? One of these 2 choices. In the meantime, let me open up the Discord group. Okay. I took the trade on pound USD yesterday. I did this in live in the community. This was my first ever trade in the month of August. So my pound JPY trade, it was this one over here, my second trade. Okay. Okay, I start to see comments now. Ashwin, managing drawdowns. Danny, controlling the drawdowns. All right, hello Bang, good to see you. Derek says, for me, not exiting a profitable trade too early is more difficult. Okay. B-Bond, controlling the drawdowns. Okay, Win, controlling drawdown is more difficult. Okay. Okay, Ashwin says, as we do not have control of how much price moves with the trend after the entry. Yes. So controlling, I mean, which one is more easier to control? Whether you make profits or control the drawdowns. The answer is to control the drawdowns is easier to manage, because you can control when to exit your trade, but you cannot control the market. That's why controlling the drawdowns, controlling the timings to exit with the drawdowns is easier, or it's more manageable to do than making profits, right? Because no one can control the markets. If you can do that, then that will be like 50-50. But if you cannot control the market directions after the entry, then you better focus on the things you can control. This is something I say in these communities, my KTS Academy GTS members. We have to focus on the things that we can control. But in reality, we tend to think about the things that we cannot control. Then as a result, you lose discipline and you may have some huge drawdowns in the end. So we can control. So what things you can control? Let me open another question, then let me explain my GJ trade. So what things you think you can control in trading? In general, like what areas or what things you can control? Again, market directions, no one can control, okay? So what can you control? What can you manage? It's kind of like an open question. So yeah, so I take screenshots of all my entry and exits. So I think, let me just pop up my performance. Or maybe it's better to do this in a spreadsheet. It's bigger screen. Okay, so yeah, what things you can control is my question. Okay, Danny says stop loss and entry size. Yes, that's true. That's true. Derek says position size, stop losses, your strategy rules. Yes. Yes, position size, stop loss. Where to take the stop loss, right? Yes. Money management and risk management. Yes. Yes. B-Bond says when you enter and exit is all you can control. Yes, that's true. That's true. Yes, everybody's right. Everybody's right. But there's actually more things you can control. So let me just tell the answer so that I can explain GJ trade. So the things we can control is, first of all, when to enter market, right? Right now, the market's moving like this. This is M5. Just pick randomly, pound USD. But market's moving, so you can buy or you cannot buy, right? You can control when to buy, when not to buy, first of all. Whether you enter trade or not, you can control, right? And also you can control which market to trade, whether it's GJ or Euro JPY or Pound JPY. Let me just show you Ichimoku in a daily. Yeah, when you scan charts, you can control which markets to enter trade. This is controllable. It's not done automatically, right? You have control over this. And what entry reasons or what entry confirmations you take, that you can control. So, and when to enter trade, you can control where to put the stop loss and position size, lot size, you can control, right? And also when to exit, you can control. So there are so many things we can control, but we tend not to focus on these things. But when you start to feel the importance of what you can control, then you can come up with some nice risk management strategies. So that was my aha moment when I start to become a non-losing trader. Because the market's moving 24 hours and you can enter trade anytime, right? That's why you may lose patience of which market to trade or when to enter trade. You may jump in the market. It's all free. You can do this anything you do. So yeah, that's why I think lots of people, traders, tend to lose, because you don't really focus on which one you can control. So if you find the things you can control, like which market to trade, when to trade, when not to trade, and stop loss, risk management, lot size, exit timings, then you can create a strategies based on the things you can control. But the things you cannot control, you cannot make strategies, right? Because logically speaking, if you cannot control, then you just have to let it go. Just like a weather. Yeah, I'm in Japan now, visiting my family, and today there was a huge thunderstorm in Tokyo. That was huge. The thunderstorm that was so huge and so loud. So I was going out. I was gonna go out tonight just to see the park, because there's supposed to be like a summer festival there. So I was gonna go there, but since there's a thunderstorm, I canceled and decided to stay home. That's why I do the live stream a bit earlier timing than usual today. But we cannot control the rain. We cannot control the weather. So when it's rainy, when it's thunderstorm, then all we can do is just stay indoor, right? We can take umbrella and go out also. So, but it's your choice, right? So you cannot really control the weather or climate. And same applies in trading. So whenever you find the timing's right, that's when you take actions. When the timing's not right, then you simply do nothing and come back a few hours later and see what happens. So anyways, so that was a bit of my comment in terms of the strategy part. So let me show you how I entered my second trade on pound JPY, which was this one over here. I took the trade on the 10th of July at 10:20 a.m. UTC time zone. Entry on 206.945 with 50 pips of stop loss. So as usual, I checked the higher time frame, which is 4 hour, has been nicely bullish with supported by the Kijun Sen, and you can also draw the trend line. So nicely bullish. The Kumo is getting thicker, bigger, so we can expect the price goes up continuously. Before I use Ichimoku, I never trade this kind of situation because I thought it's overbought, simply because the price is all the way up. But with the help of Ichimoku, now I can enter trade, because if the Kumo is thick like this, then this is not overbought. It's not overbought. So it's safe to enter trade still. And also, I confirm the trend based on the middle time frame. Middle time frames are 1 hour and the 30-minute time frames. In this case, I took the 30-minute time frame to confirm the uptrend to avoid the sudden retracement based on the 4-hour time frame. This is confirmation part. And then after confirming the trend, I check the 5-minute time frame to look for the entry edge. In this trade, I took the entry edges as in first, there's a Fibonacci bounce. I saw an N wave, consecutive N waves, all the way down here. There are small N waves up and down, and there's a stretch of bullish and down. And at this moment, since 4 hour is bullish and 1 hour is also, M30 was also bullish as we saw earlier. So I expect the price to go up and forms another N wave, right? As a trend follow, M5 should form the N wave. And once the N wave happens, once the breakout of the 5-minute chart resistance happens, I expect the market stretches up, because the stop losses for the sellers ever since here has been taken and buyers win a trade, and that becomes a buyer's momentum. So I expect there will be a relatively bigger bar. And I think the trend continues. That's why I thought it's better idea to enter trade. Again, this is only 5-minute time frame. 5-minute time frame is very choppy, ups and downs. So I always follow the major direction 4-hour time frame in this case. So even before the break of the 5-minute chart resistance, it's safe. So yeah, that's my entry timing. So again, I took the Fibonacci bounce over here by taking the most recent low and most recent high here, and this was 26.3%, 23.6%, sorry. It was a Fibonacci bounce. And also, there is a potential new N wave, which is called counter trend line. Counter trend line breakout is one of my favorite ways to enter trade before the breakout. And also, there was an inside bar breakout here. So this is how I set up my trade. Based on these analysis confirmations, I see buyer's momentum, so that's why I took entry to buy. And when I say this, maybe you found that there is a dead cross on stochastic, happens above 80 level, so you may think it's a bit risky to enter trade, right? But I do enter trade, because when it's bullish trend in higher time frames, all these dead crosses can be fake, and all the gold crosses can be true. So that's why I don't really mind taking the entry when there's a dead cross formed like this way. Let me show that briefly, because I think this is important for you to remember too as a trend follow strategy. Let's see, I will be taking where the market is bullish trend. Let's see, like here in this case. Okay, hold on. Let me choose when the markets are stably bullish trend. Okay, maybe here is a good example. So the markets were bullish here in this area, and let me talk about the markets between here and up to here. The markets were bullish, right? Hold on, let me slide a little bit to the right so that you can see all the signals. So when it's bullish trend like this, assuming that the higher time frames are also bullish, let's say 4 hours bullish in this momentum here, then you see all the gold crosses can be true. Here is true. When you enter trade here, the market goes up, right? And gold cross here too. When you take the entry gold cross, the market goes your direction, right? And here's a dead cross. There are two dead crosses. Here is a dead cross. When you take the dead cross, there's a little retracement, but since it's bullish trend, this can be fake. So you never want to enter trade here, right? And here too, there's a dead cross around this area, dead cross, but this became fake and the market renews higher. So this is a reason why I don't really care whether it's a dead cross when I want to buy the market. I always focus on the higher time frames and build my entry reasons based on the higher time frame directions. So I do take gold crosses when it's bullish, but these dead crosses won't make me stop trading because of this reason. This is, I think, the basics of these oscillators, whether it's MACD or stochastic or RSI. Whenever you see these overbought, oversold signals, you better always check the higher time frame situations. When higher time frame is bullish, then overbought and M5 can be fake. So that's why I didn't stop entry by this dead cross. I hope that makes sense to you. So yeah, based on these confirmations, I took an entry here on 206.945. Then the market gradually went down, but eventually it went up, and it shoot up all the way to 38 pips. So I thought it's safer to move the stop loss to break even. So this is also part of the risk management. Some people, once you put the stop loss, you keep it here, right? But I don't. I move the stop losses actively so that I don't lose anymore. So again, like I mentioned before, I take 2% to the stop loss. So once if the market goes all the way down this way and breaks this level here, then I lose 2%. Okay, so if you have, let's say, a $10,000 account, then I lose $200. That's a 2% drawdown. So the worst case scenario for me is always 2% drawdown. But again, I exit my trade before the price hit the stop loss. If I exit around this area, then it becomes 1% drawdown, right? So I take 2% risk per trade, and I take two positions. So 1% times 2 stop loss is what I take every time I enter trades. And the market went up all the way, so I move the original stop loss. I physically move the stop losses above my positions, so that this trade will become either break even or win game, which everybody wants to play, right? You don't want to play loss or win game. You want to play break even or win game, because the more you play break even, win game, then eventually you win. Without losing, you win. So technically speaking, my strategy is important until I set break even. After I set break even, I simply stay away and enjoy my day, enjoy my life, and come back a few hours and see if it goes bullish or bearish. If it goes bearish, I simply exit with a break even and I look for some new trades. If it goes up, then I trial profits over time. So this is the most important with my strategy, break-even strategy. So I manually move the stop losses above my positions. This was a screenshot. Then after a while, I came back to the chart. Right, after a while, I came back to the chart and hold on. Sorry, this one. Right. I came to the chart and found that the market is still going towards my direction. So I set break even here at this timing, which was about like 1:30 p.m. and this is like 5:30 p.m. So 4 hours I was away from the chart. Then came back and I found this situation, so I moved two stop losses higher. One of the stop losses to here and fixed 62 pips of profit. And second stop loss, I moved it to here and fixed 37 pips of profit. So now my worst case scenario becomes 62 and 37 pips of profit. But since it's still bullish, I don't take profit yet. It's bullish, so I never take profit, because as long as the trend goes, I follow. And this was before I go to bed, I think. After this, I think I left the chart and went to bed and just wanted to see how it goes. Okay, I see some comments now. Let me check. Okay, Symphonia says, how much of overshoot of wick or candle body over a specific Fibonacci retracement level is acceptable? 61.8%. That's the max you can take. Yes. Okay. Viveka, emotion. Oh, the things you can control is emotion. That's true too. Yeah. But it's you have to train your own emotion to be controllable. Yes. Ferdinand says, if 4 hours was not bullish but daily one was, what would you do? Then I take the daily to follow, not the 4-hour time frame. Y says, why inside bar breakout confirmation was a little bit far from your positions? Because so that I have enough buffer to the stop loss. Coming back to this entry here, I took an inside bar here, and I think you ask why this is a bit far from the entry, right? Yeah, so if I set, let's say, if I set the stop loss here, this is too close. That's obvious. And if I set the stop loss somewhere down here, it's decent, right? If I put the stop loss below the inside, then I risk 2%, and if the market retraces, breaks the inside bar bearish, then I'm gonna have to exit my trade. So it's not really, good. I don't want to exit with a stop loss. That's why to have enough buffer to stop loss, I took 50 pips, and that's why I'm able to take this inside bar breakout. Yeah, and forgot to mention, sorry, and also I was taking this Tokyo box breakout. This is a resistance of the Tokyo box. So Tokyo box breakout was also valid entry confirmation as well. So once the market retraces, breaks the inside, breaks the Tokyo box bearish, then I was gonna exit my trade. I hope that makes sense. So yeah, then again I put the stop losses like this, fixed 62 pips and 37 pips of profit, and went to bed. And next morning I woke up here, or I came back to the chart here. Usually after in the morning time, I don't check the chart right away. I usually have my relaxed time, like I take a walk, or I meditate, or I stretch, and I do some exercises, and I have breakfast, then come back to the chart. So usually I don't really check the charts as soon as I wake up. So when I checked the charts next morning, it looked like this. So one of my trades with a 62 pips of profit was taken here. So I fixed 62 pips of profit, but second stop loss was still alive. So I moved the second stop loss to here, and fixed 85 pips of profit. This was the most recent low on the 5 minutes, so I fixed a profit of 85 and kept holding my trade. And on this date, I had to go out almost all day, so I knew I won't be able to check the charts. So I moved the stop loss to the most recent low, and if the market takes a stop loss, then that's how I take profit of 85 pips. So then what happened was, after that there was a huge news. This was a US CPI in the month of July. The result of the US CPI, Consumer Price Index, was worse than consensus. So when the news happened exactly on this drop, USD was sold and JPY was bought, and as a result, this pound JPY went down so much, as negative correlation between USD and JPY. Usually when USD is bought, JPY is sold, or Swiss franc is sold. They are usually negative correlation, not always, but usually negative. And it happened here. So I put the stop loss here, right? I fixed 85 pips of profit. I put the stop loss on 207.80, exactly 207.80. I put the stop loss, but when the news happened, there's something called slippage. In the beginning of this live stream, I was gonna talk about the slippage, and this is how it happened. So, again, if you remember the number 207.80, and if I checked my account, it was actually closed on 207.708. So it was more like 10 pips of slippage it happened. Then fixed a profit of 207.70. So 207.70 was slightly down here. So this is where I exited to take profit. So I get the profit of about 75 pips, which is still good. But because of this, I get the slippage of 10 pips. So the lesson here is that whenever the news happens, especially the big ones, high impact ones, like I mentioned in every Sunday's weekly forecast, this is the reason why I don't enter trade before the news. Because of the spikes up and down, and plus slippage like this. So if when the news happens and when the slippage happens, in this trade I kept holding the trade. I knew that there's a big news coming up, but I kept holding my trade because I was running enough profits. But imagine that if your stop loss is still below your position. Let's say if your stop loss, you enter trade here, for example, right before the news, buy, put the stop loss below here, let's say, stop loss. Then you keep holding, hoping that the market goes bullish at the news. But then if this happens, stop loss, let's say, is about, let's say 20 pips. You have the 20 pips of stop loss, but actually you exit with 30 pips of stop loss, 30 pips drawdown. So technically you lose more than you expect, and that's very risky. In my broker, it was 10 pips, but in your broker, it may be different. It may be less, it may be more. It depends on the broker's execution. But either way, the slippage happens in this kind of news, and that's really risky to trade. That's why I don't recommend anyone to trade before the news. If you didn't take any trades before the news, then always come back after the news. If the market goes bearish like this, then no entry. If the market goes bullish, then you look for another entry opportunities to buy. But if you enter trade before the news, it's too gambling, right? That's one of the reasons why you don't want to enter before the big news. And second reason you don't want to enter before the big news is that usually the market loses the volatility. Like before the US CPI, after this, the market ranged all the way. Usually the market doesn't move, up and down before the big news. Like before the non-farm payrolls, before CPI, before ADP employment rate, before rate decisions, interest rate decisions announcements. Usually before these big news, the markets won't move that much, and it takes off towards the new direction after news. So it's always better to find the new entries after news. So yeah, that's why I don't recommend anyone to trade before the news. And also, I have tried to enter trade at the news. For example, when I see the news like this down, I was looking at the 1 minute time frame, and 1 minute shows downtrend. So I was gonna sell. Like let's say when I start to see the market falling down like this way, then I sell. I execute the sell. But what happens is that because of the high volume in the market, you won't be able to execute the sell here. Whenever you press sell, it doesn't execute usually. And what happens is that you're able to sell down here, for example. Then in the next 5 minutes, the market shoots up all the way and you lose the trade. So hopefully you can capture the start of the trend before the big news, but realistically it's difficult and it's risky. So especially if you want to make profits over time in the long run, not like in a gambling way, but if you want to trade, keep trading as a profession, as a full-time trader in the long run, then I don't recommend you to trade in this kind of manner. Because I have done that. So I know exactly how it goes. So yeah, that was the lesson, I think, for everyone, and that's why I decided to take this example as one of the slippage examples. So again, overall, my performance has been positive in the month of July. So yeah, let's see how it plays out in the month of August. But again, it looks like the markets are still active. I still see some pound pairs trending down and some new potential pairs trending at the same time. I continue to look for the market's opportunities. Okay, so yeah, let me now check some more comments. Again, thank you very much for joining everyone today. It's 7th of August on Wednesday. Okay, let me see. Symphony just says, thank you, Kay, but I mean if bounce happens between 50% and 61 and the wick or the candle body overshoot 50 level, how much of overshoot is acceptable? Okay. I see. I think I didn't get your questions right. So how many overshoot is acceptable? It depends on how it closes. So no matter how much overshoot happens, if it closes above 61.8 or 50%, then it's valid. Yeah, because that means there's a strong buyers on that level. The market went down all the way below 61.8%, but then came back up above the 61.8%. So the market is respecting 61.8% as the buyer's zone, and from there buyers may come in. If the candlestick becomes a pin bar, then after that, if the next candlestick closes above the pin bar, then most likely it takes off bullish. So as long as it closes above one of those levels, those are valid. Okay, J-Wise, what is your take on AUD USD? Let me share my analysis tomorrow. When I do live stream next time. Today, I just wanted to focus on my trade performance. So if there's any other comments related to trade performance or related to my GJ trade, let me know. GM says, do you think trading is a game of patterns? I compared very old charts and the same pattern still occurred today. Yes, I think so. Yeah, for me also, sometimes I see patterns that are confirming, winning direction towards my direction. So whenever I see patterns, then yeah, I feel I take these as priority to enter trades. Patterns include not only the wave patterns, but also including the candlestick patterns, time cycle patterns, higher time frame, or especially like Kijun Sen bounce, Tenkan Sen bounce are also patterns too. So as long as the pattern continues, it repeats over time is actually true. So I do see patterns, yes. I think trading is a game of patterns. Yes. Yeah, and basically based on these patterns, I enter trades. I select the market and look for the pairs to trade based on the patterns. But to prevent me from jumping into the market, I look for entry confirmations, entry edge. Just because the market's trending up, I don't want to jump in the market. I have to make sure that the momentum is bullish in the 5-minute time frame, and I want to sniper the entry timings. And that gives me more patience to enter trades. So that's how I design my strategy. Okay, you're welcome. Xander says, what is your advice for new traders with limited capital? If you have limited capital, then you can either save your money more and start with, if you have $1,000, then I think that's enough to trade, enough to start. $1,000 I think is a minimum to start trading. But if you don't really have the capital, then I think the other option is to challenge like FTMO or some other funding programs. Yeah, lots of my students passed these programs and became a funded trader. So once you become a funded trader, you take trades every month and you save money and you open your own account with like $10,000 account. Then you start from there or save money enough to start the trades. Okay, hello Roman, thank you for joining for my Ichimoku community. Thank you very much. So in my Ichimoku community, I provide the archive videos and Ichimoku Basic Masterbook, but officially it's now closed. It's transferred to KTS Academy. So if you want to learn more, deeper level of my strategy, then you're always welcome to join my KTS Academy, which is a monthly subscription, or there is a global training school, which is my 3-month training course. We meet every week in one-on-one, and I exactly teach how to enter, exit, select the market. Basically everything I told you today, I teach here. Next one starts in October. So please let me know if you're interested by email. Okay, GMM says, have you heard of the 20 pips challenge? Do you think you could do it? That would be really cool. I'm not really sure. I never heard of it before. 20 pips challenge. Let me see. Is it like FTMO kind of challenge? $20 pips challenge. Boost your trading skills. Is a targeted approach enticing traders to achieve a daily increment of 20 pips. Oh, I see. So this is like target to be like 20 pips per day kind of strategy or concept. Yeah, I never tried. Well, for me, I prefer to extend the profit as much as possible. So I don't want to exit with 20 pips. Once it goes, I want to trial. Because we never know how far the market goes, right? If my understanding is correct, then yeah, it's not my style. But I will check. After the live stream, I will check. Okay, CSM says, I have a habit of consistency. constantly looking at the chart after setting the break-even line, so sometimes I don't get good profits. I see. Yeah, so next time, time yourself. After set break-even, time yourself and try not to come back to chart for 2 hours or 3 hours and see how it goes. Yeah, in trading, less is more becomes true. Less means the less you screen charts, the less you check charts, then the more you make profits. Becomes true. Before, I was aggressively looking for opportunities. I was taking 20-30 trades per day, and I was scalping when I started my journey as a full-time trader. And the more I entered the market, the more I lost my money. So the more, not always, the more to make profits, right? So I was always wondering how to take less entries and how to make more profits, which is possible in trading. And based on that concept, I built my own strategy. As a trend follow strategy, with the proper risk management, it becomes possible. So time efficiency is really important with my strategy, because the more you enter trades, the more you screen charts, the more time you sit down in front of the charts do not always relate to how much you make profits, right? So it's better you check less time to charts, less time to decide which one to trade, less time to enter trade, less time to monitor chart, then make profits. That's why one of the strategies I came up with was the break-even strategy. So that's why I say to CSM that if once you set the break-even, then try to be away from the chart. Psychologically, it's difficult, but as you train, you will get used to it. When you backtest also, you can try. When you move the bars one by one in backtesting, you run the chart for 2 hours, 3 hours. You don't touch anything. You don't touch the stop loss. You don't take profit, but simply run the chart for 3 hours and see how it happens. This way, you can maybe control your emotion on your live trades. Om says, hi K, if waiting for 5-minute candle to close when getting out of a losing trade, what if it keeps dropping hard? Do you still wait for the candle to close before hitting the stop loss? Yes, I always wait for the candlestick to close before hitting the stop loss. It always happened. Yes. If the candlestick closes on the stop loss, that means your stop loss is too small, too tight. All right. Sander, you're welcome. Okay, is something new about Keifu strategy? Yes, it's coming up and I will be sharing to KTS Academy members. Keifu is another pattern of Ichimoku in terms of candlesticks to capture the market trend reverse with the 5 lines of Ichimoku. So that's my new project actually. I'm actually having hard time to look for those patterns because I have been traveling here and there, so I haven't been able to sit down and look for those patterns. But yeah, that's on my list. Yes, in KTS Academy I will be sharing that. Yes. James says, is it a challenge to grow a little money into a lot? It's not a big challenge, but instead I always recommend anyone to start small and grow it bigger. never start with a bigger amount. And bigger amount and small amount depends on your financial situation, right? But like I mentioned on the previous videos or live streams, the most important thing you have to remember is you have to have two wallets, a wallet to live and wallet to trade. Always separate these two wallets. And you never touch the wallet to live. You never touch the bank account to live. You only trade with the saving money for trading, so that even if you lose this one, it's okay. It's a lesson. You save money again and you trade with the trading money, but never touch the living money. Because if you start to touch the living money, then your psychology will be more rush. You may feel more formal, you may feel more pain in losing tricks, and it's not good. So always trade with the money to trade only. And this should be small. It doesn't have to be big, because you're gonna have to practice and see more patterns or winning trades. You have to journal, you have to look back your own trades every month. So you better start from the small account, but never withdraw. Never withdraw money, but instead, as you keep winning the trades, then compound the profits. Compound means you never withdraw. Let's say you start with $1,000 account. Then let's say if you have a 10% return per month, then $1,000 becomes $1,100, right? And with the $1,100, you keep trading and you get another 10% return of $1,100, not $1,000 again. So as you keep winning more and more, then your account grows exponentially over time. And that's the safest way and also aggressive way to make profits, to grow profits. And that's how I did it. I started with $10,000 account and I compounded, and plus whenever I find my performance to be positive for the next 3-4 months, then I added more account. I added more money, like 5,000 or 10,000 more. Then I traded with the bigger money. So I compounded the profits over time and never withdraw until the account until the account grows to my target. So yeah, that's how I grew my money. So yeah, that was hold on, let me see. Okay, yes, sorry. I saw something else, but it's okay. Yeah, so yeah, that was my live stream and performance of the month of July. So I hope you enjoyed today's live stream, or if you're watching the archive, I hope you enjoyed today's archive video. And one thing you have to remember again is to become a non-losing trader. And hopefully you get to understand the importance of the risk management. And I didn't really talk about the psychology management today, but you will see how I managed my positions over time. And psychology becomes important. To be patient, to be able to make the profits grow over time. So yeah, seems like the markets are active still, so let's monitor chart, look for opportunities every day, every week, and let's see how it goes in the month of August. So thank you very much for joining, everyone. If you liked it, please press the like button before you leave, that would be great. And hope to see you in the next one. So until then, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you very much.